So let's start off with your price target for Southwest and your rating ahead of earnings.
Yeah, absolutely. So we have a $33 per share target price and a neutral rating on the stock. Long-term, very good quality company, but going through a transition.
All right, so your price target implies about a 6% upside from where we are right now. So you're not that bullish on the stock. So what are the biggest headwinds when it comes to Southwest? What challenges does it face going forward? And how do you see the Department of Justice and the Department of Transportation looking into this company? That generally isn't a good thing.
Yeah, absolutely. So I think on a top-down level, there are kind of two places we think in the America's airline space that are really fascinating. So one would be those carriers that have significant international long-haul capability, where I think some of these corridors, such as the transatlantic, are going to be booming, or excuse me, they're going to continue to boom several months from now. I think the other pocket that looks really interesting is on the domestic ultra low cost carrier side, where if we do get some economic moderation, those carriers with the strongest seat mile cost profiles are likely to prosper, especially with oil prices coming down. And then you have a Southwest, which I think is a great airline, but it's in that in-between sort of land versus not having any international long haul and not really being the seat mile cost leader in the domestic market. And then on top of that, you've had these operational issues, some growing pains in terms of the new strategy that they seem to be employing with respect to having a little bit more slack in their flight schedules.
Okay.
In terms of the scrutiny that's on them now, whether or not it's fair is a little hard to say. But certainly when we look at some of the major disruptions over the past 6 months, Southwest doesn't they have unfortunately been an outlier.
Yeah, I mean, I guess the regulatory scrutiny right now isn't a surprise when you leave thousands of people stranded. So whether it's fair or not, it's a big issue. So I want to focus on just some macro issues. As you mentioned, there's oil prices are a factor. There's also the possible recession. Southwest generally seen as a lower cost airline. I know those international flights are higher margin. Airlines make more money on them. But as we face a potential economic slowdown, is that possibly a tailwind for Southwest, where people may have less money to spend when it comes to vacationing? Southwest also gives you those 2 free bags.
Yeah, so certainly all of that will help. I think one of the questions that we have as we move forward, when you look at the new cost structure, or what the new cost structure should be in terms of having more slack in the flight schedule, more robust staffing, greater investment in software, flight op software, and the like, and how much pilots and other staff are finally going to get paid.
Okay.
Not trying to knock them. Everybody is out there trying to do their level best to reach new labor agreements, but the confluence of these items suggest that we should see some higher costs going forward than we used to.
All right, so potential turbulence when it comes to Southwest Airlines ahead.
It could be turbulent, and it's going to depend how these things get implemented and whether or not we get a break from acts of nature.